surplus soared to an unprecedented $992 billion in 2024, driven by a 21% surge in exports totaling $3.58 trillion, as reported by multiple sources, including the South China Morning Post. This record-breaking figure comes amid concerns about potential trade tensions with the incoming U.S. administration under President-elect Donald Trump. The staggering $992 billion trade surplus in 2024 underscores China's economic resilience and export-driven growth strategy. This historic achievement was fueled by a 5.9% year-on-year increase in exports, reaching $3.58 trillion, while imports grew at a modest 1.1% to $2.59 trillion. December 2024 saw a particularly strong performance, with exports surging by 10.7% to approximately $336 billion, marking the second highest monthly export value on record. This remarkable trade surplus highlights China's continued dominance in global trade, despite ongoing economic challenges and potential trade tensions with the United States. The surge in exports played a pivotal role in China's record trade surplus, with shipments growing by 5.9% year-on-year to reach $3.58 trillion in 2024. This robust performance was particularly evident in December, when exports jumped by 10.7% to approximately $336 billion, marking the second highest monthly export value on record. Key drivers of this growth included all-time highs in car and computer chip shipments, as well as increased trade with countries participating in the Belt and Road Initiative. The export boom underscores the resilience of China's supply chain and its ability to capitalize on global demand, despite looming economic uncertainties and potential trade restrictions. The sluggish growth in imports, which increased by only 1.1% to $259 trillion in 2024, reflects ongoing challenges within China's domestic economy. This weak domestic demand has compelled Chinese manufacturers to rely heavily on international markets for growth, contributing to the record trade surplus. Several factors have contributed to this situation. A persistent housing crisis has dampened consumer confidence and spending. Low consumer spending has affected various sectors of the economy. The disparity between export growth, 5.9%, and import growth, 1.1%, highlights the imbalance in China's economic recovery. Economists like Ding Shuang from Standard Chartered note that China's economy remains heavily dependent on external demand. This reliance on exports raises concerns about the sustainability of China's economic growth model, especially in the face of potential trade restrictions and global economic uncertainties. China's record trade surplus in 2024 sets the stage for potential trade policy challenges in the coming years. With President-elect Donald Trump set to take office, concerns are mounting over possible tariff increases on Chinese goods. Trump has pledged to impose 10% tariffs on Chinese imports, which could significantly impact China's export-driven economy. This looming threat has created uncertainty in predicting the strength of China's policies to support domestic demand. The future trade landscape may see China diversifying its export markets, with a particular focus on countries participating in the Belt and Road Initiative. In 2024, China saw its largest ever share of trade with these nations, indicating a strategic shift to reduce dependence on traditional markets like the United States. However, the sustainability of China's export growth remains uncertain, as higher tariffs and global economic challenges could make it difficult to maintain similar levels of trade expansion in 2025. As a result, Chinese policymakers may need to accelerate efforts to boost domestic consumption to offset potential declines in export demand. James Howells, an IT specialist from Wales, has faced